You are watching Market Watch, the brief overview of the key events from the world of finance. Yesterday, the Eurozone reported changes in the level of inflation and GDP for October and the third quarter, respectively. The actual data turned out to be significantly lower than predicted. Let's start with Germany, which surprised investors by reducing import prices by more than 14% year-on-year. As a result, inflation in the currency bloc has already rolled back to 2.9%. But the slowdown in the consumer price index was achieved at a great cost. After all, the rapid growth of the key interest rate, as well as the deterioration of the geopolitical situation, led to a contraction of the Eurozone economy. According to the results of the third quarter of this year, GDP decreased by 0.1%, which came as a surprise to investors and traders. At the same time, there is a risk of further deterioration of the situation. Despite the repeated decline in Eurozone GDP this year, the head of the Central Bank of Germany has declared the expediency of long-term preservation of the key interest rate at a high level. This is necessary for inflation to reach the target level of 2%. Most likely, the majority of voting ECB members hold the same point of view. And although the situation on the other side of the ocean is much better, American stock indexes ended another month in the red zone. For example, the so-called broad market index, S&P 500, has lost approximately 10% over the past 3 months. Given that the Fed is considering raising the rate, the stock market sell-off may continue. Following the stock market, investors got rid of black gold. So on the last day of the month, American-grade WTI oil continued its earlier decline. Most likely, one of the key bearish fundamental factors is the risk of a slowdown in the global economy. I said earlier that the Eurozone economy contracted in the third quarter. There is also a risk of its slowdown in the United States, which will lead to a decrease in demand or at least to a significant slowdown in its growth. Consequently, the probability of an increase in the deficit decreases, weakening the demand for oil. At the same time, do not forget that today the Fed will announce the results of the vote on the key interest rate. The absence of direct hints of a willingness to raise the rate in December may provide moderate support for the oil price. We will also draw your attention to the dynamics of trading in the cryptocurrency market. Bitcoin is still squeezed in a narrow sideways. And although this is a natural price behavior, we should not forget about the main reason for the observed consolidation. In addition, the previous wave of growth, which amounted to more than 30% of the value of Bitcoin, was provoked by the same reason, the expectation of the appearance of an investment fund that allows investing in Bitcoin. If the market receives serious confirmation that the Securities and Exchange Commission will not approve the application for the creation of this fund in the near future, then Bitcoin may collapse largely. But the approval of the application can provoke an even stronger and longer-term growth of Bitcoin and other coins. That's all I have. Follow the news carefully and be prepared for all the surprises of the market.